Hello, everyone. Welcome to Let's Talk Real Estate USA, Episode 2. We have Dina Parla from Cardinal Financial on today. We're talking all things mortgages, how to get one, real life market conditions, and life in the industry. Remember to hit the like and subscribe button. And with that, let's go. Hello, everyone. Welcome to Let's Talk Real Estate USA. Today we have Dina Parla from Cardinal Financial. Hi, Dina.
Hi, Craig.
Hey, how's it going? So,
Good.
today's show is in three parts. First, about life in the mortgage industry. Second is mortgage information for homeowners. And finally, mortgage information for our core audience, which is real estate amateurs and professionals. All right?
Awesome.
How did you get into the mortgage industry?
I never really thought about being in the mortgage industry, but then I was out on disability. I was a massage therapist at the time, and I blew out my wrist, and I was on disability for surgery. And I realized that my massage therapy career was over, or I was never going to be able to, massage like I was before. So I was like, well, what can I do? Like, what can I do that's going to make some money? And I had a friend in the business who was very successful, and she had always encouraged me to go into it. And I said, well, what the hell? I'm going to try it. And so basically, what I did is there's a 24-hour, no, a 20-hour course called the Safe course or something like that, some mortgage course. Went online, took the 20 hours of classes, studied for the national exam, um, took the test, passed on the first try, and then once I passed, then I looked for a mortgage company to sponsor me. So basically, you have to pass the national test, and you don't become licensed until you have a company that sponsors you, that basically takes you on.
Oh, so it's
Um,
very similar to realtors with brokerages.
yep, yep, yeah. Yeah, so once I got sponsored, then I started working for a mortgage company.
So, what do people misunderstand
Okay.
most about you and your career?
I would say one of the biggest misunderstandings, it's from borrowers, from clients, is that they pay me. Um, so they're very, like if I have like the rate shoppers or the people that are very concerned about fees, they always want to know like, well, they want me to cut my commission for them a lot of times, but what they don't understand is that they don't pay me. My company pays me. So that's a big,
Mhm.
misconception.
So, why is it that you're not getting paid by them and by your company instead? What is that point?
My company pays me to do the loan. So, I get a percentage of, oh my God, I'm sorry. I didn't realize my dog was in the picture. I get a percentage of the loan from the loan amount. I get a percentage of the loan amount, but it has nothing to do with them. It's a fee that my company pays me.
What is your favorite memory so far in this field?
Honestly, my favorite memory are the hard loans, the ones that like I really had to fight for, the ones that have always wanted to have a house of their own, and they just we just always the ones that always wanted to have a house of their own and had some financial issues are always the hardest loans, but they're always the ones that I fight the hardest for. And when we get that clear to close and they have their like dream home, those are the best memories for me. Um, yeah, I don't know.
So on our side, the realtor side, oftentimes the things that are like really coming up are inspections. The negotiations aren't always going well. That's the sort of stuff we're clashing with. On the mortgage side, what are the really hard things that you have to sometimes overcome?
Um, Occasionally, if a house underappraises, that always becomes an issue. That could kill a deal. Let's see. People buying a car while they're in the mortgage process, while they're buying a house. That's happened before. That could kill a deal. People not disclosing when they apply, maybe some credit things that they had, because the credit report doesn't pull up everything from the borrower's past. Like for example, I've had somebody who had a foreclosure, not that long ago. It didn't come up in the credit report because it was long enough to not come up in the credit report. But when the underwriter looked into the file, and they do a special review. When the underwriter looked in, they found that this person had gone through a foreclosure. So, things like that. If you don't disclose it, it's going to come up. I mean, you have to be honest. You have to just lay it all out there. It's not a good idea to hide things. It'll always come up. We'll always find out.
So let's delve into that then. I heard you talking about underwriting and all these things. So, what are the steps that you have to take as the person who's getting the mortgage together? What are the steps you take from when someone applies to when they close? Just like simple approach.
Got you. Okay. So once I get their application and I get their documents, I review everything. I, we, I review their debt, I review their assets, I review their income, and from there I come up with a formula to see what they qualify for. After that's done, they're pre-approved. Um, Once they have an accepted contract, that's when they go into like the processing stage, processing, underwriting, appraisal, um, you know, eventually clear to close and close.
Can you tell us the difference between pre qualifying and pre approval? Because it's a big difference.
Yeah, it's a big difference. So a pre-qualification is basically just a verbal conversation between myself and the person wanting to get a loan. We just go over their income, we go over their assets, things like that. Everything's verbal, nothing's checked out. And I can give a pre-qualification letter, and it basically just says, hey, like based on this our verbal conversation, this is what you are probably good for. And it makes mention that there's been no additional review. Pre-approval is a little different. Is really different actually. Um, you apply, you formally apply. We run your credit. I look at your documents. I look at your W-2s, your pay stubs, your taxes if we need them. I look at your bank statements to make sure you have the assets. Um, so it's a lot more in depth. I look at that, and then I can, determine what you qualify for.
So, the next question is what's your biggest failure and what did you learn from that experience?
The mortgage business is funny, right? You don't know what you don't know. Um, and it's a learning experience, and I'm sure it's probably similar to, real estate. We go in and all the training in the world, all the tests we took in the world doesn't make a difference really at the end of the day until you apply it. And we don't know everything, right? So, I mean, when I think about biggest failures in the mortgage business, it's probably just loans that I failed on, like something I missed. because I don't know everything. You can't possibly know everything, every situation. Everybody's different. Um, so I had one recently, um, where I read the taxes wrong, and underwriting missed it too, and it was a really bad thing. And um, I learned a lot. I learned a lot through that. But it's something I still think about. y- uh, that guy couldn't get a house. He thought he could. He thought he could get this house, and then it all fell on me at that time. Um, but there's going to be failures, right? I mean, I don't pretend to know everything, and you know, learn as you go.
No, I totally get that. For those people listening who are looking to apply for a home mortgage, what are the documents needed for pre-approval?
So every person is different. The basic documents are 2 years of W-2s, 1 month of pay stubs, 2 months of bank statements from any account that you intend to use for down payment and closing costs. Now, if that person is self-employed, we're going to need taxes, we're going to need profit and loss statements. If that person owns any properties, we're going to need information on those too. Um, and then there's other various things, like if they're on Social Security, we need the award letter, things like that. But the general thing is income, assets, income and assets.
Cool. What? Oh, shoot. What is a common myth about the mortgage industry, especially for people who are trying to buy a home? They're always saying, oh, well, if I'm buying a mortgage, every time that I get pre approved, it's going to hit my credit, things like that. What are some myths that you would love to bust?
Uh, 20% down. You don't need 20% down to get a mortgage. I still got a lot of that. Depending on the loan, you could get as low as 0% down. First time home buyers can do 3% down. We have the USDA loan that does 0% down, VA, no money down. Um, and then, like I said, the first time home buyers, conventional loan will go down to 3% for some first time home buyers. FHA is 3.5% down. Um, so, yeah, that's a common myth, um, the 20% down. Another common myth is you need perfect credit. You don't need perfect credit. Some of our FHA loans, we can go down as low as like 550, which is insane. Um, Insanely low. But yeah, so that's another common myth. Um, Another common myth is credit. Like you said before, getting your credit run. You're allowed to shop for a mortgage. Getting your credit run is not going to, by a mortgage company, is not going to hurt you in the first 30 days. You can shop around for a mortgage um, for 30 days without it hurting your credit score. What else? I think that's all I can think of right now.
No, those are really awesome. And they're constantly, when I'm talking to new clients, those are pretty much the three that always pop up. 20% is needed, perfect credit is needed. Oh, I didn't want to get it pre approved, it's going to hit my credit score. Those are always the three that keep coming up. What is an incredibly important lesson you've learned over the course of your career? It can be about mortgages exactly, it can be about the mindset. What is an overarching lesson you've learned?
Calm down, and things usually have a way of working itself out. I've spent many stressful days and nights worrying about whether a loan is going to close or what it's going to work out to be, only to find out, I came up with a solution, or somebody came up with a solution and we worked it out. I mean, that's been my biggest challenge. I would freak out over everything. And I still freak out over some things, but I've learned to calm down and just trust in the process.
So, the next thing that we're going to be covering is what are some things that homeowners should know while applying that we haven't already covered, like pre-approval and such like that, and process. Is there anything else that we really need to know?
I mean, it's not this that important, but a lot of companies, mine included, when you start an application online, it, there's a timeout time. There usually is like you only have a certain amount of time to complete the application. I have people like leave and then come back in like a week and they're like, "Where's my application?" So, I think most companies have some sort of like 3 to 7 days of filling out an application before it times out. Um, it's kind of, it's not a big deal, but
Question for you. And this is something I didn't learn until I bought my house, which was when is the first payment normally due after closing? I thought it was due the day that I close, and then I found out it wasn't.
that's an awesome question. Yeah, so you skip a month, and you pay the first of the next month. So if you close August 20th, your first payment, you're skipping September, and your first payment is October 1st. Sometimes, like, if a closing is like delayed or something, like if you close on sometimes you can close like the first of a month and somehow skip it kind of, but the general average rule is you skip a month. So the one other thing that is also a common, not necessarily misconception, but a common belief is like you have to have all of your down payment and closing costs at the start of your purchase, which in actuality, it doesn't have to be the case. I mean, if you're short a little bit funds and you're getting paychecks, you don't have to have everything right up front. You have to have it probably a week or two before you close. But if you're short a little bit, you know, you just have to have it before, a week or two before you close.
Cool. So, I want to delve into a new idea, which is back to your connection as a mortgage industry expert to real estate professionals and amateurs. We tend to think of the two as being very separate. Here's the mortgage people, here's the realtors. But I'm constantly having the mortgage lenders coming through the door of Keller Williams to chat with us to do all sorts of events. Can you tell us more about this cross communication and cross working with the real estate professionals? Can you delve more into that for us?
Open houses, whether it's with flyers showing up, um, will do events with them where, we, I don't know, share a table at a festival or something and, try to get people that way. Um, First time home buyer seminars I've done, marketing through postcards, flyers, social media, um, all that kind of stuff. I mean, really anything that they come up with that they think could grow their business and I can help them, whether it's financially or, just showing up, I will do that.
So, what is the best marketing tool that you have found that works?
I've had success with doing events. Um, in person. I have a lot more success. Like the marketing, the postcards, that's all well and good. It gets your face recognition from the people that you're mailing to. But the in person, I've had the most success from, like, buyers, borrowers, things like that. I've done some festivals with agents, and we've like split the cost of the table and marketed ourselves, and we've gotten clients that way. Um, Obviously open houses, like co-sponsoring or, doing open houses as well works too. But that's like a necessary evil. You got to do open houses.
So, what would you like real estate or professionals and amateurs to know that they are constantly misunderstanding?
I feel like that's a loaded question. Um,
Do it.
uh, that we have lives too. And that, sometimes, if we don't pick up the call or we don't get back to you as soon as possible, it's not because we are lazy, we want to avoid you, whatever the case is. It's just that, some of us have families and other things going on too, just like you guys do. But I will always get back to you.
So, who has been your most important mentor in the mortgage industry?
Hmm. You know, I don't know if I have
Keep in mind, I can edit.
specific men. Yeah, I don't know if I have one specific mentor. Um, I do. I tend to watch successful people from a distance and see what they're doing. I'm more of kind of an introvert, and I don't really like reach out to people. So I'm kind of more of a sit and watch what people are doing, and they're not necessarily mentors, but they're people I look up to. And it's mostly like successful women. This is a male dominated industry that I work in. So when I see successful women who are loan officers, I tend to watch what they're doing and how they're doing it.
So let's talk this current market. It's shifting. So let's talk about what you are seeing in the mortgage industry first and foremost, and then we'll talk rates. Well,
Sure. At one point, probably about a month and a half ago, the rates shot up to like low sixes. And I thought that they were going to kind of stay there. I'm glad I was wrong. They went down. They probably around yesterday, they were in the high fours, low fives. This morning though, the job report came out, and so the rates are reeling from that. They've shot up again. I don't know what they're at right now because I haven't looked. I've been kind of afraid. Um, we'll see. Usually, when rates have like some kind of freak out, they bounce back and they calm down. It always happens. So I have a feeling they'll just calm down and they'll drop back down a little bit.
so what are you seeing in the industry as a whole?
Um, in the industry as a whole, I think the people it's a tough market for mortgage professionals right now. I'm seeing people bow out, get another job, leave the mortgage industry. Um, I also see I feel like those people are the ones that never they kind of just waited for the work to come to them. But the people that go out and get the work, that that do events, do keep in touch with agents, they're the ones that are going to survive this crazy market. Um, it's very slow now. It's slow for everybody. This is the slowest I've been in 2 years. But with that being said, I'm still doing well, and I think it's because I'm doing the things that I need to do to keep going. So, uh, a lot of mortgage companies are laying people off. Support staff's getting laid off like crazy. They keep the loan officers because those are the ones that bring in the money. But, a lot of mortgage companies are not necessarily short staffed, but don't have the processors to do the jobs anymore because they've laid everybody off. It's tough.
So, let's shift ever so slightly. What are your goals for the upcoming year in your business, and how do you want to help build out that for yourself and for the people you work with?
My goals for the upcoming year are to continue to build my business. Basically what that means is visit open houses to meet new realtors, um, branch out, make calls to realtors that maybe I closed on that handled the sell side um, of a mortgage I did. Events, that's always a good thing. Like happy hours, things like that. Um, Honestly, it's just really just keeping in touch with agents, reminding them I'm here, um, showing my face at things. I tend to slack off on that because, like I said before, I am an introvert. And doing things face to face does make me a little uncomfortable, but it's the nature of the business. So I got to get better at that, and I got to keep doing that. COVID was nice because I didn't have to see anybody, and the work just came to me. And now it's like COVID is, people are living their lives again, and now I got to go back out and show my face.
So, what would you tell someone wanting to get into the mortgage industry?
It's not easy, but if you do the things you're supposed to do, if you listen to the people that have been in the business and you do the work you're supposed to do and you don't give up, I promise it'll work out. Um, you know, I always say to myself, I have to, because I'm an introvert, I have to be comfortable being uncomfortable. And that was my motto, be comfortable being uncomfortable. And I had to do that in order to get to be successful. And I would also say, don't quit your day job because it takes a while to ramp up in the mortgage business. And if you could work a job while you work mortgages and learn, because it's a lot of learning. Um, Try to do that too. I worked a part time ish job while I learned mortgages, and I needed that supplemental income. And get a company that will train you. Don't just go to some random company. Make sure they have a whole training section because you need training in mortgage. That's all.
Where can the where can the listeners find you online?
Get approved with Dina on Instagram. That's my Instagram handle. Get approved with Dina. Um, that's where you can find me. That's where I do most of my stuff.
What's one question you wish I had asked you, and how would you have answered it?
What's it like being a female in a male dominated industry? And I would have answered difficult. um, you know, um, I've come across some like issues with that. The I don't want to generalize and say all men in my companies that I've worked for, but I definitely there is definitely men out there that think women can't do this job or feel intimidated by women, strong women that could. And I've come across several in my 4 years of being in the mortgage industry where I've had to really fight to get to have my place where I am.
So I think that pretty much covers everything for today. Can I want to say a big thank you to Dina Parla from Cardinal Financial for coming today. And I look forward
Thanks
to
for
having
having
you
me.
again in the future.
Awesome.